Ladies and gentlemen of the crypto space, we're live on a Wednesday, April 10th at 11:31 a.m. Thank you all for joining this morning, and obviously everyone has many thoughts because of CPI reports, and if the CPI is higher, how are they going to cut rates? And for 2 years, all of social media, all of crypto, Twitter especially, has talked in terms of the Fed's funds rate has to come down. QE has to restart. The balance sheet needs to go burr. The printer is coming. Printer is coming. But what if all of those stories were correct, but not about the components of the system that they thought people were talking about? They thought people were looking for to see when quote unquote favorable conditions would be bestowed upon us market participants. It's imperative to at least attempt to understand the workings of the system to understand where we are in a quote unquote cycle. Now, good and bad are also very relative terms. What can be good for us invested in particular types of assets, digital assets in this instance, can be very bad for the real economy. And when I say the real economy, it's a good part of what I want to talk about with regard to pipes. It's the bifurcation of the entire economic system into the real economy and the financial economy. What is good is such a relative terminology. The real economy has been decimated. I posted shortly ago on X how the real economy has been swept by a tidal wave. Illiquidity, real estate basically either stalled at a residential level or under threat of significant liquidation at the commercial real estate level. Credit grinding to a halt, not necessarily because of interest rates, and obviously they're pretty shitty interest rates. Who in their right minds taking 6, 7, 8, 9, 10,000% interest rate to buy a home? But just the concept of constrained balance sheets at the commercial banking level. They're not incentivized to lend because their balance sheets are screwed, and therefore they cannot even lend if they wanted to. And that's why SLR conversations are interesting, and my talks with Ben are very intriguing. He understands a lot of details to a much greater extent than I. But between the regulations and the collapse of their balance sheets value mark to market, which they don't, they define it as HTM, hold to maturity, has created a situation where commercial banks have been significantly reducing the available supply of currency in the U.S. domestic real economy. Bad. Good. They have massaged, to a degree, regulations, which they're still adjusting, but also the capacity for these banks to say solvent and through this mess, and as the volatility in bond prices eventually subsides, and today is another story, because we sure as hell have a lot of volatility today. So we're not there yet, but as the volatility subsides, it gives the banks time. It buys them time, and they've bought them time since March of 2023 when the U.S. banking system failed. It's imperative to digest the terms and the statements I make uh, when I'm very serious. Like the U.S. banking system started to completely collapse in March of 2023. It also started to completely collapse in September of 2019. People don't talk about these things, but they're real. If there was not a capacity to resolve the volatility and intervene in balance sheet liquidation to free up capital, just as if you would sell assets to top up your Aave health factor or prevent a loan from being liquidated. In crypto terms, these banks had the exact same phenomena. They needed to sell stuff that they owned in order to come up with cash. And that basically rendered, well, the ones that failed rendered their balance sheet a negative, insolvent. They couldn't come up with the required cash, and if they did, they wouldn't have been able to come up with the required amount of cash, and they were in a precarious situation. Some of them tried to raise capital, so on and so forth, and all those complexities. But the point being, banking system failed in March of 2023, and it would have been a significant cascade. Fear would have spread. Anywho, that's the real economy in the US. Every country has a real economy, and this entire story can be told about those economies respectively, and that's not an easy story to tell, and I'm certainly not qualified to tell that story. The extent of what I understand is a very high level of the relationship between the US real economy and the global financial economy. That's mostly what I understand. I understand the flow of pipes or the flow of capital through the pipes and the way the system is wired, at least at the highest of levels. And that's why we have the Japanese yen. One thing I greatly understand is the structure of the system, and when the structure of the system remains calm, consistent, the cycles are relatively even, everything's calm and complacent and everything works. But when things start to deviate, when things start to break trend, volatility happens. Shit sometimes hits the fan, and that's really like people see Bitcoin appreciation when it breaks to the upside, and you see, the God candle. Yeah, but that's representative of systemic volatility. That's not a good thing in a financial system. So this is kind of what I said earlier. Good and bad are very relative. Good for Bitcoin price appreciation, but that means some shit is really fucked up. If there's that kind of a liquidity, either a buy side, sell side imbalance, it's representative of people in the system, people buying and selling that see something is messed up and they're trying to reposition themselves accordingly. Anywho, so this is a very bad chart. They have been trying very vigorously to keep the yen below 152 to the dollar, and as of right now, they failed, and it broke pretty hard by almost, you know, an entire whole digit from 152 to 153. The yen is being sold. It is being sold, obviously, we could assume to purchase dollars, which is awkward because if you're purchasing dollars and this is like government pipes and big megacorp pipes and banking pipes, you're doing this kind of size to move this chart this much, usually buying something and usually buying treasuries. But also the Japanese 10-year is getting sold off pretty hard. So this is really weird. You sell JGBs to raise currency units, and then they're selling the currency units to raise dollars, and they're not buying treasuries because U.S. treasuries are selling off. Rates are popping, up 3% on the 10-year. Shorter end of the long end, 2-year, 5-year, sold off a bit more. 4% on the 5-year. Illiquid, by definition. There's not enough bid in the market to keep the volatility low, which this basically implies the move indicator is going to spike. Give it a day or two. This thing will pop. And the volatility suppression team. The team gets called in. The red phones are ringing because this is really the most important volatility indicator. It's the bond market. It's not the VIX or the stock market. That's all knock-on effects. That's all small potatoes. Might be the richest capital market in the world, but it's not the world. It's not the global financial system, the U.S. equities market. It's large. It's big. It's the biggest in the world. But small potatoes relative to the bond market and the global currency market, especially as I define the bond market as money. And the money is used to print currency, and the most popular currency to print is dollars. Printing of currency is done via the mechanics of credit. Credit is the printing of currency in the global financial construct. Hope that helps. So the bond market's selling off pretty hard. It's pretty remarkable. Gold all the way up to 2339. So it's getting sold marginally today, but obviously it's been on a ridiculous run. But it's interesting to see yen selling off, JGB selling off, Treasury selling off, and also gold selling off marginally. So it's not like the sell pressure in basically the biggest markets in the world are bidding gold. In fact, unless you see something spiking pretty strongly today, and it's certainly not U.S. equity markets. Let's take a look. Certainly not U.S. equity markets. So U.S. equity markets are selling off marginally. I'm just speaking marginally. It's not 20% drops on some of these things. What are they buying? All we've looked at is red in equities markets, red on the yen, red on treasuries, red on JGBs. They're buying dollars. They're not buying gold. Gold is up, but it's not up right now. So all these sells for dollars, what the hell are they buying? I'm very curious. This is very curious. So what are they buying? Very, very interesting. I don't know. I don't have an answer to that. But speaking on stream and just talking the shit, everything is selling. To what? Historically, you would see this type of inverse correlation between the selling of everything and the buying of treasuries, the collapse of yields. But that's not occurring right now. Treasuries are selling off also. For dollars? Dollars are a transitory destination. What's the destination? You raise dollars because you want to buy something. You're parking capital in a very short period of time because you got to clear about a 12 to 15% hurdle rate on a yearly basis. So something is brewing, and that is ultimately what this data indicates. Something interesting is brewing. Interesting can be in terms of scary, and good and bad are relative. So scare, obviously we're all interested in good relative to us invested in digital assets, but that often implies some shit is fucked up in the global economy, both the real and financial, somewhere in one of those two. Anywho, Bitcoin is also selling off marginally. I mean, look, how much of that is a sell-off? This is non-log chart, and this is very marginal selling. But it's very interesting that all asset classes right now are selling. Everything is selling. What do they need the dollars for? What are they going to buy? So this is like a precursor step for us to figure out what the hell's going on, and this is why it's so imperative when you're engaging with markets to have patience, um, because you don't know what they're going to buy. And when I say they, I mean us, you, me. It's the culmination of everyone that creates these markets and these charts, the composite man, so to speak. These charts are cumulatively representative of a single person. That's the total composition, the tapestry of all our individual behavior. So frankly, on a day like this with everything red, 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 I'm very curious. I'm excited. These markets tell a story, and they tell us something interesting is coming. And this tells us fear. Are they going to park their money in dollars? Sure, that makes sense. And maybe the people are like, oh, CPI came in hot in the U.S., but that's not the global story. They're not going to cut rates in the U.S. That's not the global story. That's the U.S. Just very, very interesting how things are going to play out over time. Let's do some comments, and we'll also talk a little bit structurally about what's going on in crypto markets and what I see long term. I'll tell you a little bit maybe on how I look at these markets for myself and my strategy compared to what most people do. Maybe if we get to that, folks, remind me if you want me to talk about that and I don't get to it. Raul, hello. Zen, hello. Athletic Concept in the house. Good morning. Noah, Macro and Crypto Mentor. What's up? Yeah, Tape Pusher in the house. Is Move and DXY going down almost inevitable over time? If so, why? So, if you want the system to continue, both of them have to go down. If Move spikes, that means collateral volatility is spiking. And when there's collateral volatility, everyone's like, all right, why am I going to borrow right now if my bonds are going to get more expensive? That means I can borrow more if my bonds are more expensive, my collateral is more expensive. Or if my collateral becomes cheaper, oh, if I borrow now, maybe I'm at risk of liquidation if I borrow with too much leverage. So volatility generally is the inhibitor of activity. DXY plays into broadly the value of the dollar, and the value of the dollar is critical to the capacity to the world to fulfill their debt servicing obligations. They have printed all of these dollars over these years, hundreds of trillions of dollars, and they have to come up with interest payments in dollars. But the world operates not in dollars. They borrow the dollars, they use the dollars, and they denominate most everything in dollars. But each country has their respective economy that they have local business in. Therefore, the conversion rate of relative fiat is imperative to respect, meaning if the dollar is appreciating, the relative currency is depreciating, but they still need to come up with the same amount of dollars to pay their dollar loans. Which is why, generally speaking, the DXY as well as the move indicator need to come down strongly in order to stabilize the system and facilitate growth into the future. If it doesn't, everything falls apart. Now, my 2 cents about falling apart, and this is in good part the way I think about markets, if everything falls apart, it's all over. It's to me, it's silly to short Nasdaq or short the S&P. I don't care the world's. I care if the world's falling apart as a human from a sentimental perspective, and also I want to stay alive perspective. But I'm not here to bet on the world falling apart. That only happens once, and if they fail to massage the tapestry of global financials, then no one wins. Everyone loses. ATMs don't spit out cash. Supermarkets don't get shipments because truck drivers don't get paid. Everything grinds to a halt, in which case the real hedge is MREs, canned food, uh, power, at-home power where you produce your own power, rain collection hopefully, and maybe a garden in your backyard. That's the hedge. So to me, engaging with financial markets is a binary bet, one involving, prepping, which I'm not the best prepper, and I generally think everything and anything will be done to retain the functionality of the system. Otherwise, it's literally Mad Max. And I'm not really fond of seeking Immortan Joe for my water, so I do think about that in some regard. But it's either that or the system does what it needs to do in order to survive. And by the system doing what it needs to do, it's the actors that are, you know, assigned management of the system, frankly, the regulators, that will do what they have to do in order to keep the lights on. And for the lights to stay on, DXY needs to come down and MOVE needs to go down. DXY needs to come down because the U.S. needs its trading partners. We can't go around causing Mad Max in Japan. It's an ally. You don't want to collapse the euro. There's a lot of countries, and there's a lot of manufacturing and a lot of imports and a lot of business in Europe. You can't go around destroying other countries. So obviously things are getting weird from a geopolitical tension standpoint. But in the end, we are dependent on the rest of the world because of the globalization process that has occurred over the last 50 years. And therefore, a lot of the manufacturing, if not almost all of the manufacturing, especially almost all of the not precious metals, critical materials, critical materials are imported. So we're dependent on external nations to do this. And for these external nations to continue even trying to meet our import demands, they actually have to have functional economies. Otherwise, there's chaos and Mad Max around the world. So for that to occur, the DXY has to come down. And for the DXY to come down, it's massaged. It's mechanically impossible for the DXY to go down, organically, considering the composition of the global economy. The DXY must always go up because dollar demand is always increasing, because more and more debt is created to print these dollars internationally. So in order to service that debt, they're buying dollars. And if you're not able to get credit to get dollars, you're buying dollars on the market. And that's the Forex market. That's the DXY. And cyclically, what happens is in favorable conditions with available collateral, U.S. Treasuries, and low volatility, that takes pressure off of the dollar FX demand because they're able to get credit instead of buying dollars to service debts and so on and so forth. So it's this whole interwoven tapestry of knock-on effects and pushes and pulls on these different markets that gives us all of this volatility that we must navigate. And to navigate it, I tell you this story as I've come to understand a lot of these causal relationships between very subtle financial phenomena. So I hope this helps. That's generally what I think about with regard to how things even attempt to progress forward. So 105, there's a lot of pressure in the markets. This is like a structural complexity, like devalue the dollar. How do you devalue the dollar? The strong dollar is what gives us a lot of power. And the dollar will get stronger, but you can't let the dollar get too strong, otherwise you're going to literally bankrupt allies and cause Mad Max for ally nations. And Japan is a pretty complex situation right now with their bond market. How's their bond market selling off and their currency market selling off simultaneously? So very mechanically speaking, you could only save one or the other. Either sacrifice the currency to save the bond market or vice versa. So this is a very eyes-on moment. It's always an eyes-on moment every damn day because there's always new data telling us what is mechanically going on in these markets. Hope that helps. Topsy's in the house. Yo, 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 missed a couple of lives. We back, baby. Yep. The market's still here. And I'm just here still talking about the market. Kaysen's in the house. Good morning, Cap. Any thoughts on Aura? Generally, my opinion of Aura hasn't changed much. Do I even have a ticker? I don't get it well in TradingView. Let's see if we get it over here on Gecko. There you go. Balancer. Makes sense. Well, technicals will drive you nuts. You're like, oh, technical bottoming pattern. That's why it's so imperative to understand the mechanics of these financial products. They've adjusted monetary policy, and you could inspect that, and that's a big deal what Balancer does in governance and what Aura does in governance. And I appreciate that a lot of what we've invested in is you have to build it and deploy it to see what it does, and then you're able to mutate accordingly to find a monetary policy or a tokenomics or an economic feedback mechanism that is sustainable, hopefully. And we've seen the VE is sustainable with an effective federation. We've seen that VE33 is sustainable unto itself with the appropriate implementation, of which there has been few. Frankly, in my opinion, there's 3 teams that have been effective thus far. And a little uncertain about what's going on in Polygon, but 3 teams are pretty interesting. It's obviously the Velodrome team, which has Aerodrome. It's the Ramses team and their Kingdom. And the Equal team on Phantom is kind of holding things together. The chart looks pretty damn good. And I'm curious what plays out on some other side chains. But those are 3 teams that have been successful. Now, everything else has failed or has been trailing and not overwhelmingly successful, conclusively successful. And that's quite extraordinary because Solidly came out in what, 2000, end of 21, if not 22. And we all know the catastrophe there. So it's been 2 years that these teams have been building, 2+ years maybe. And very few have done well. So I guess the point being, back to Aura, we don't know what they're going to mutate into. It's mutable in many regards. They have a lot of strings to pull in governance, and that's a consideration unto itself. But most certainly, they still need some mutation. They still have tweaking to do because they don't have the robust federation that Curve has. And that gives great luxury for fiscal spending. I mean, is that ironic or stark or interesting at least that that's the comparison? All the debt, all the consumption of U.S. treasuries outside of the United States has afforded the U.S. the capacity for deficit spending to the degree that it has done, which just fuels more treasuries outside the U.S. So it's very akin to these types of systems, and that's in a comparison I've drawn for some time with regard to the curve federation. And I've long spoken that I would have loved to seen, or still would love to see, a more robust aura federation. I think in exuberant times, none of this, none of this narrative matters. And frankly, I do think generally what matters is survival. And I think Aura and Balancer, they're in it for the long haul. I think they're established at this point. They have a reputable brand. They have available liquidity. They provide a critical function. They do provide liquidity financing. So I think they're entrenched. I'm just trying to highest level compare what has worked thus far from a liquidity financing regime perspective. So clearly VE works with a robust federation. Clearly VE33, the three teams have shown them to be very functional and sustainable and pretty damn good investments. And Aura has been trailing from that type of conversation. They've been just not doing as well as the others. Um, so it's just something to think about. I've had an aura position for quite some time. So what does that mean? That affords me the luxury of, do I want to be involved and own this type of business? And I appreciate that luxury because that's certainly not something I want to be tempted with or entertain. Uh, it looks interesting technically. Let's see if there's a bit of an inverse head and shoulder. It just, the chart unfortunately does scream weakness. I wish I had my moving averages more so of a trading view presentation. I could offer some more insight because curve does look really good from a technical standpoint, which is very contrary to what the general public would say. If we go into something like the weekly chart, you do have these series of higher lows since September of last year. So it's many months and it's one, two consecutive higher lows, but we're starting to see this structural resistance flip support, at least on the time weighted average price from a weekly perspective. And we're starting to see an upward thrust of the 10 SMA through the 50 SMA. So this is kind of things that are indicative of directionality reversal in the bottoming process. Obviously lagging as compared to the vast majority of the market. But as you can see, you barely had a break in the 10 SMA through the 50 SMA back in April of 2023. Did have an early one in November of 23, but it looks like, oh, no, I'm sorry, that was a break of the 10 SMA through the time weighted average price. But now this looks a little bit more comforting from a bottoming process standpoint. What's most interesting is it's an older protocol, especially as compared to Aura. It dates back to late 2020, of which through all the insanity of 2022 and 2023, it always printed higher lows. So that's quite constructive, one, from a sustainability standpoint, and two, survivability standpoint, and two, from it's a very robust federation that all the participants contribute to enough of a disruption of circulating supply that it couldn't print a lower low under even the most extreme of conditions. This is a very comforting chart for being a core of, in particular, my portfolio. Let's go out to the monthly and see if there's anything constructive from an M&A standpoint. Yeah, okay, this is constructive. Last month was the first breach of the monthly time-weighted average price since it failed in 2022, the beginning of 2022. So that is quite constructive. And now, if we're able to close, for instance, not a bearish engulfing on the monthly, 20 days left in the month, if we flip the 10 SMA support on the monthly, that's constructive because there was no real support back here in early 2023, but also we're on top of the 10 SMA with a green candle, an inverted hammer, which is a bit of a shooting star, so it's not overwhelmingly comforting. So you could have a reversal. And if the reversal is a non-bearish engulfing as the follow-up candle, that is a bit constructive that we can see continued upward price action, upward accumulation, and eventually push through the time weighted average price on the monthly. Once you get up there, then standard rules apply. Breakout, resistance flip support, and you look for higher high, for trifecta of bullish confluence, things like that. But it's getting there, and that's very appealing considering how important I think the system is to infrastructure of these crypto markets. Hope that helps, Kazin. Angelo, what about AJNA? I'm literally going to go to CoinGecko for that one. By the way, as I'm looking this up, if you're on X or YouTube, please put any comments that you have in the chat, and I'm more than happy to answer anything on your mind. Oh, you going out on the left? You going out there in left field, aren't you? I don't know what it is. What network is it on? I mean, yeah, you can have a million and one things. I mean, frankly, it looks interesting from a functionality standpoint. What network is it on? My general response is you're going to see 10,000 of these protocols. And I stick to the boring shit. So sure, it looks very interesting. What network is it on? Doesn't even say. Very interesting. Okay, great. Lending, lending, lending. Everything's lending. You know what the best lending protocol is? CRVUSD. Boring as shit. Simple as that. Why? What kind of lending are you going to get? 10, 20, 30%? Everything produces 10, 20, 30%. It's all the same 10, 20, 30% over and over again. So 478,000 market cap. Man, you going right to the micro caps, aren't you, my man? I have no idea. I don't have an opinion of such a micro cap. I want a more mispriced asset. And frankly, 478, I need to know what network it's on, first and foremost. That's Let's go to the markets. Mainnet. Huh. Okay. There's a mainnet protocol. Uh, Look at the branding. For the branding is maybe Pendle-ish. Pendle was very unexpected and printed a lot of returns, a lot of gains for a lot of people. Pendle was a product that was geared towards the general public in many regards, and it did very well. So there's plenty of micro cap early stage opportunities in this regard, and that's not something I often talk about. I have a very core set of protocols that I talk about that are very significant, and I focus on the credit I focus on, but it's not. I don't even focus on credit. I really talk about the federation, and I talk about liquidity financing, and obviously we talk macro and fold that into why credit is so significant, why dollars are so significant, and therefore why stablecoins really are the biggest business in these crypto markets. Now, bear in mind, what was the marketing branding? Let me remind you of something. Permissionless lending pools. That's what Aave is. Aave is permissionless. You can interact with it unquestionably. It's permissionless, and that's so I'm not. It's great marketing. It's great branding. This is all meaningful, but these are imperative things to understand. How hard it is for a small protocol to get off the ground to potentially compete with the larger brands. It's the same phenomena that happens in the real world, and that's literally why everyone goes to Amazon for everything. Everything concentrates. Human nature is very much programmed to concentrate into what's the leader. It's exactly why everyone looks for a leader. There's safety in leadership. There's trust in leadership. And that's exactly the thing that you will observe if you really inspect the shit that we all do on a daily basis. That's why Ave's Ave. It's the stuff, the original stuff. Time tested, mother approved. You want a loan? That's where you go. So it's very hard for a small business to compete. Food for thought when looking at ultra micro caps. Now let's pull up some volume charts as I continue down our comment stream. Marginally negative sum week over week. We could get granular and look at the markets, which is actually very interesting. I should do that. Let me hit some comments and we'll get back to that. Kill us in the house, much a pleasure. Are the pipes gonna bust with all the dollars we will soon be making? morning, morning, everyone. Yeah, the structure of the system is really primed for the financial economy to expand. Now, the real economy looks like shit, but it's looked like shit for a long time. And it's hard to peer through the veil of what a good real economy is. And obviously, unemployment is relatively low. And you could talk about all the numbers and be critical of second jobs and part-time work and illegal immigration padding the workforce. And it's very complicated. And in many regards, you get political. And you're talking about like the construct of society as kind of changing significantly. But the real economy, I would say, from an investment standpoint, is fucked. Uh, that's probably the most important thing to talk about in the conversation and the context that we like to talk. What are good investments? So the real economy looks like shit because of malinvestment. You can't get credit, so how the hell is a small business going to get off the ground? And that's exactly the situation that the vast majority of the stock market is in. If you look at the Russell 2000, it looks like crap. Let's take a look real quick at some real economy. 100's barely broken out, but IWM. Russell 2000 is lagging significantly. And where's equal weight? RSP? I mean, it's all breaking out, but if you take out the majors and you look at the rest of the stock market, it has lagged significantly, and the malinvestment is significant, and smaller companies are having a lot of trouble. And this is very indicative to late stage capitalism type conversations and how everyone crams into the market leaders, the Magnificent Seven that prop up the economy, and it's the few that survive. This is historically why there's government intervention into monopolies from a U.S. perspective, and why you see this around the world. The biggest of corporations gobble up everything and become these pillars of the respective economy. And but the financial economy looks primed, and to understand that, it's really interest rates, which is generally aligns incentives to either domestic U.S. real economy or international financial economy for the printing of currency. The reality that the currency supply needs to expand in order to pay all these debt obligations. And the alternative is deflation and spiraling collapse of global economic structure. So, do they kick the can? The odds are most likely yes. Move down, DXY down, dollar supply significantly up in the relative short term. And relative short term, you're talking about 2025. Q4 2024, Q1 2025, something has to happen. If it doesn't, the system doesn't work. If the system doesn't work, your probable best hedge is MREs, an off-grid solar install, electric vehicles so you don't have to get gas, a bunch of ammunition and firearms for people that want to eat out of your refrigerator, a garden in the backyard, and a rainwater collection system, which is basically total prepping. Total prep or crypto is kind of the best investment structure that I could possibly think of. It's the only thing that really makes sense to me that the global financial system, from a currency supply standpoint, significantly expands, in which case the crypto markets are going to be very interesting because they are a pure financial market. Or you better have a shitload of MREs. 2 cents, 2 cents. Tape, push, shirt, my man. Bad guy, morning cap, looking sharp. Yeah, I did get a haircut. I clean up every now and then. Cap, can you share your opinion on Linnea chain? Headwinds, tailwinds? Well, headwinds is consensus. So they have a significant support from a major actor in crypto markets. So they have a fair amount of capital. They're probably going to be incentivizing as well as financing development to build out a robust infrastructure. They built the chain for a reason. So they're going to support it. Tailwinds, it's off the radar relatively. It's microscopic compared to other markets, but financial markets are not like companies. Financial markets have a way of monetizing because and it's like an emerging market type conversation. There's a lot of growth potential in emerging markets. So I see more tailwinds than headwinds. Um, it's very interesting. Now, it is obviously to be sized accordingly. You don't know whether something small is going to become big or not, but it's enough of an interesting consideration or enough of an interesting total package offering from a chain perspective, as well as the products on the chain that create financial infrastructure to warrant a spec size position that can go from relatively small to something that's significant. And I found that very interesting. So what do I look for when I want to understand what's going on micro emerging markets? You go to the volume chart to see what the financial activity is. Generally, minus 3% week over week across the entire crypto space. Of course, everything's down. It's getting sold off. And frankly, if it's minus 3% week over week, that means it's leaving the crypto markets and going to the real world, generally speaking. Ethereum mainnet, oh, so the picture gets different when you get granular and specific. We haven't seen this for quite some time. This is very interesting. 15% week over week on mainnet. So mainnet is not very understood, especially in common social media talks and X tweets, because it's relatively expensive, and the vast majority of actors aren't spending 30, 40, 50, $60 a transaction. So you have most conversation on Solana, obviously. Base has been hot. Optimism has been lagging. Polygon will come back into the fold. Phantom Sonic has a heck of a, a strong narrative brewing in social media. Cheap chains, Cosmos hubs. That was very hot at the beginning of the cycle. 15% week over week. Structurally, the flow of capital in this system of emerging markets is changing. That's a big deal. Capital flight from L2s. Actually, that's what it means. If you have all at a negative and you have Ethereum at a positive, actually, this is let's look at stables to talk about continue this thread. Okay, we're still positive 2% on the week total stables. So it's still a positive sub environment week over week in stables. Very interesting. 1.26 on Ethereum mainnet. But let's go back to volume. So volume on mainnet indicates something very interesting. Who's the actors on mainnet versus who's the actors on L2s? And that tells you something about the behavior of people in the market. So what's slowing down and what's speeding up? I've looked at this over the last night. Polygon speeding up hasn't had much traction this cycle thus far. Let's go down the list. Binance Smart Chain, cyclical roll, 30% week over week. Optimism has been down for quite some time. It's just been minus 10% week over week. So it's been lagging significantly. Phantom, much less negative. Phantom was a big financial collapse the week prior, but now it's at minus 2%. I expect this to go positive at some point. Phantom Sonic narrative is a big deal. I'm not sure what Cello entirely is. Avalanche still big negative financial activity week over week. It's been lagging significantly. Relatively expensive to operate on Avalanche. It's like 50 cents a transaction, which is pretty stark compared to a couple of pennies on Arbitrum and a penny on Optimism and Base, so on and so forth. Oh shit, Arbitrum plus 6.15%. Optimism lagging, base at minus 20%. Week over week financial activity. So base has a big narrative. Narrative is Coinbase, the super cycle. Everything's going to go up, up, and away on base because all the inflow from Coinbase. Great, that's a great narrative. It's a great story. Do you think everything goes in a straight line? Cycles will cycle. Minus 20% week over week. Data is data. Activity on the network will roll over. Prices will go down. When prices go down, you have capital flight. In a market where there's basically permissionless and frictionless flow from market to market by going to Stargate, boom, click, pennies to go from base to Arbitrum, Arbitrum to Optimism, Optimism to Linnea to Mantle. And frankly, you go over to 1,001 different exchanges, layer swap, you go over to Thor swap, and you go and cross chain seamlessly to Wormhole to get to Solana and the other stuff. You're going everywhere. Swap, you're going straight over to Cosmos hubs painlessly nowadays. So cross-border flows have broken down significantly. So you'll have capital flight from minus 20% volume week over week. Opportunity seeks outperformance. And when prices are going down, underperformance rotates to outperformance. Just so happens 6.15%. It's on a 852 mil. That's a lot of financial activity. Base is half the financial activity of Arbitrum. One half. Size matters. Narrative and hype don't mean much when presented with data. Very important thing to understand. Aerodrome is a big deal. De facto governance purchased by Coinbase. It's big stuff. I have a high opinion of Aerodrome. I have a high opinion of Velodrome. I also want to respect the portfolio and I want to buy things at a discount. And I can't buy it at a discount. I don't have cope for missing out. I would like to be in. And I will buy in if prices are favorable. And I don't think prices will be favorable for the particular position size I would want. If it gets to 100 mil market cap, I want to own 1%, 2% of the protocol. I don't have a mil, 2 mil to buy into the protocol at these prices. Am I salty about a missed opportunity? No. Do I recognize that it's a missed opportunity? Yes. Do I chase a missed opportunity? No. Will there be other opportunities? Guaranteed. Will there be other and endless assets that are mispriced based on comps, relative valuations of protocols? Guaranteed. Guaranteed. And the data will tell us what is mispriced. And right now, I find Arbitrum very interesting. 6.15% increase in volume week over week, particularly with, why the hell isn't Solana at the top? Base rolling over minus 20% week over week. The delta between base and Arbitrum is very interesting. And let's see what volume's like on Solana. Minus 5% marginal week over week. A bill in volume. What a hell of a network. But the transaction fee complexity, no, not the fee complexity, the transaction failure rate, the overloading of the network is going to cause cyclical rollover. It's not a bad thing. It's just understanding the flow of capital between markets. That's why we started the stream in understanding money, to understand how and why money moves. And then apply those real factors to these crypto markets and you get a sense of why money moves from market to market and where money moves to seeking outperformance. It's just rational causality. Phantom Cell, Avalanche, Base. Let's take a look at the little things we've been looking at. Little Linnea. Little Linnea with $25 million of network activity is so tiny. But it's pretty nice to see this fight between Linex and Nile. Linex is an older V33 implementation, and 277% week over week change in volume on Nile, flipping. Linex being flipped by Nile in weekly volume. with 1.15 volume to TVL compared to zero point 0.4. To me, the data is quite stark and quite eye-opening as something that was ready to outperform and likely will continue to outperform from a technical implementation standpoint. Nile has had one hell of a run, and we were all late, all of us, because we didn't buy it at 12 cents. So we missed out on a 10x on this bad boy, and I myself was able to acquire about it about right around here, 97 cents. And my size not being super size, I do cause breakouts, and that's just probably a result of my capital inflow. Probably bought up to like a buck 15 on all the buys. This is probably all my activity here. So, sitting at a decent premium. It's not a 12x, a 14x. So that's an interesting point that I could help folks with. You really optimally get the super discount, the crazy mispriced. So what is the rationale for buying something at a bit of a premium? You don't want to chase because chasing is usually detrimental to the portfolio. But I guess it's subjective. Gut instinct, when do you chase a little bit? At what threshold do you chase? I can't answer that. And everyone will have to answer that individually. But that is a case for my activity in this particular protocol. Because clearly, me not buying at 10 cents and me buying at 90 cents, I missed out on 8, 9x on the money. So that's chasing. And that's not something I'm too fond of. But Linnea, I thought, was very interesting and compelling from a consensus standpoint, enough that it did warrant my activity, my action. Will I look back and see financial loss in the future? Because I buy these things as ownership, not as liquidation. Like if it goes to $4, $8, $10 in ridiculous bull mode, it's not something I liquidate at the top. And so where's the bottom, the next cyclical bottom? I talk about that quite often. If the next cyclical bottom is at $1, all right, at least I got the cyclical bottom. So I often think in terms of the cyclical bottom. That's the most important thing. Where will we be at the end of 2025, heading into 2026, when the whole world is convulsing? That's the price that I want to buy below. We're running out of investment season, in my opinion. I think there's less and less mispriced assets to take advantage of. Let's look at one other market that's taking advantage of Athena to an extreme. Mantle. 26 mil market minus 22% week over week. Oof, goodness gracious. Merchant Mo is the first expansion in recent times of Trader Joe. Trader Joe is on Arbitrum also, obviously started on Avalanche. Trader Joe is a totalitarian owner of Avalanche, which is quite interesting. And Merchant Mo is an interesting expansion, considering they went with Trader Joe on Arbitrum. A bit of a rebrand, minus 44% week over week in volume. Cleopatra looks strong compared to it. That was another asset that we have acquired recently that was a little bit more favorable from a technical standpoint. There was a big break from this head and shoulders, inverse head and shoulders, right up here, and it ripped down. So this was basically the entry point that I saw was a decent opportunity. I mean, it's not too many multiples, because if it's at 33% at structural bottom and you're getting a bid at $63, you're buying at 100% premium. 100% premium is clearly a better entry price than 7, 8, 900% premium. So this wasn't too bad from a discounted price point consideration. See where it goes from here. I have a high opinion thus far of the kingdom and the team. Why? They've shown to have a model that works. They have the relationship with Alex Cutler at Velodrome, and that worked. It's working, which is very interesting. Because if something works and it's a novel financial construct, it's very meaningful. Because we're talking about iteration of real financials, and for something to stick, especially with regard to the alignment of incentives, and we've talked about incentives and how important they are. It's very meaningful to come up with something that actually works. Real innovation. Um, Hope that helps. A little bit of a digression from the bad guy's point. Uh-oh, because you asked about Linnea headwinds, tailwinds, and I digressed over to Mantle, and anywho, interesting stuff going on other chains. So I really like that Coinbase, Base, Robinhood, Arbitrum, Consensus, Linnea. I think that's interesting. And obviously Mantle is neck deep in Athena. Bybit I've heard has interest in it as well. So this is interesting stuff. Ritari, morning cap. Great to catch you live. What are your thoughts on Berachain? I like Berachain. Early waiting mainnet launch. Yeah, it's been taking some time. I look forward to it. I'm sure there's an airdrop involved, and we all get free exposure to it from one of our already existing exposures. Saga just launched as well. DYM, Celestia, all these are great protocols. Um, so I think interesting things. I don't necessarily. When I think of Cosmos hubs, I don't really think in terms of buying. Everything is just dropped, which is very interesting. Certainly not going to complain in that regard. My opinion for my interaction is take the drops and lock it. Lock, 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 lock. And blocking produces income. Oh my, it's literally perfectly consistent with everything we do. All right, great. So I think all of that makes sense and it simplifies the equation greatly. And if something comes of it, great. If Cosmos and Atom and all this shit over on the Cosmos hubs becomes like a big part of global financials in the East, very Eastern centric narratives for Cosmos hubs, great. Everything goes 100x, 1000x on the money. So big punts. Angelo, F mainnet, yeah, it's hot. F mainnet is hot right now. And others I've seen base also. Oh, you're talking about the microcap we were looking at earlier. Um, There's no governance and no Oracle. Yeah, it's a complex topic. Okay, that could be interesting. And that's not for me to discuss those types of opportunities. I can only work within what I look at, and I need to fold things into my framework to be able to discuss them with confidence and clarity. So, what you state are interesting properties, and that's interesting. Robert H. Equal is hot on Phantom. Go figure. I mean, are we surprised? There's one of the third teams. Obviously, you have the Velodrome, Aerodrome team, and you have the Kingdom team, and you have the Equal team. 1930, big breakout, cup and handle of sorts, higher high, macro headwinds, unfortunately. Could be a bearish engulfing from a daily perspective, but you know me, who gives a shit about the daily? Zoom out to the weekly. Very interesting breakout, fresh higher high on the weekly. Gotta see closes on the weekly. Looking at Gecko Terminal is more so from a price action standpoint rather than a technical standpoint. Much better indicators from a trading view perspective, so I'm not pulling it up here. Price action looks constructive. Obviously, significant premium. You're talking about a 20x on the money, 40x on the money. It was 50 cents. 40x on the money. That's a heck of a premium to be paying. That makes the premium on things like RAM and Nile and frankly on Velodrome too. That makes the premium on the Velodrome look relatively mute. 7 cents, it's like a 400% premium from recent structural bottom. I mean, obviously there was much more premium down here, but you're talking about 4x. That's all it is. These didn't go base. Bear in mind it's at 146 mil market cap, so it has had relatively high market cap since inception, 4 cents. Frankly, this market cap goes up because of the emissions and very, very well constructed protocol in hindsight. They've done very well, come a long way to get to where they are. Very impressive to say the least. Let's take a look at Phantom volume. X volume, Phantom. Equalizer number 2, plus 58% week over week. 0.34 on volume to TVL. Wigo and a couple of others do weird things with volume to TVL, like Mummy at 298. I'm not quite sure entirely what to make of it. Spooky, the old school liquidity source on Phantom, trailing 0.18 volume to TVL. All relatively small volume. Hard to get a sense of where things are going to head into Sonic's launch, but frankly, Equalizer is in a strong position. Let's see what Solidly comes up with, and that is something I am interested in. Curve as well, 58% week over week, 344,000, obviously small, but they have a capacity to throw around a lot of incentives and direct investment. We've heard the stories, and they're obviously very comfortable financial infrastructure. And I'm not too interested from a volume standpoint on their AMMs anymore. And I've talked recently about how I see the curve narrative evolving into a full stack, foreign exchange type vertical to support their lending operations from a Llama Lend and a CRV USD perspective. Very interesting. Um, what else? What else? What did I miss? What did I miss? Arrow, thoughts on equal. My concern with FTM as a whole is that it's a very hot and cold eco. Either protocols die or move to OP. I think we're in a bit of unprecedented territory. Sonic is a game changer. So that plays into like position size. And equal is a 40x on the money from the bottom. It is the most appreciated asset in this category other than Aerodrome. Significant premium on it. Food for thought for you incomers. From a cap gains, that's a whole nother story. Buy at any price as long as it goes up. Frankly, I speak from an incomer perspective, and it's at a significant premium, so it's very hard for me to have too much interest in it. Hope that helps. Angelo, there is no governance, no Oracle. That's the micro cap. Thoughts on Velo coming to Fractal? Do you know when Ra token will be live? With VEFXS coming on Fractal, what percent can we expect from locking? Lots of thoughts, very interesting. Velodrome coming to Fractal. I mean, you already have Ra, and Ra has a lot of liquidity at this point. I think it's kind of situated as maybe if who's going to be the first to come with the incentive token, the governance. Let's look at the liquidity. I mean, there's a fair amount of liquidity here, so they got a lot of momentum, which is interesting. It's part of the kingdom. Ra is part of uh, Ramses, Nile, Cleo, so on and so forth, Pharaoh and Avalanche. So they have that going for them. Velodrome comes over, could be interesting. It's literally a very similar protocol, maybe a little bit more advanced, but they're all working together. Maybe Velodrome comes over in the form of Ra, and everyone teams up, and everyone's friendly and happy, and everyone's winning. So I don't know. A lot of unknowns about how things play out. As for Frax, Frax has come online with 13% APR. So I find that very interesting because historically this was basically zero. So all of a sudden, 13% APR on VEFXS as pretty interesting from a monthly income standpoint, with size, obviously. But I'm very appreciative and thankful to get those extra FXS credits. It's good to see. Good to see. I like Fraxel a lot. It was my second largest position. Ramses absolutely killed it and just blew past Frax. That just absolutely got wild up to 20 cents. It's still at a higher valuation of the portfolio than Frax. This was just an epic run. Uh, where was my position? 1.8 cents. I don't know. Somewhere. Maybe the first one. I don't know. 1.8 cents was give or take yeah, right here. Right about here. This run up right here. Can't get lucky all the time, and there's no way to know. So the only reason and logic and rationale that I can offer you for taking this position at this obviously structural low was these stories I tell you about how capital flows, how money works, how money is printed, why capital flows from underperformance to outperformance, and what's important from a liquidity financing, from a credit perspective, this type of infrastructure, and follow the rules. Make those rules yourself, and they will guide you to something eventually that is mispriced. And the more mispriced, potentially, the better. It was a hell of a run from that low. And I think this is only the beginning, particularly because Ramsey's, you go over to Dex volume, Ramsey's has $86 million in volume, up 40% day over day. And Aerodrome is down 40% day over day with 38 million volume. Ramsey's has 2x the volume of Aerodrome, being a very comparable protocol on Optimism versus Arbitrum, base being an Optimism superchain. And it's 100th the market cap. So that's pretty mispriced. Uh, well, to say the least. Let's look at the chart real quick. Arrow at $718 million of market cap, doing half the daily volume as something of $8 million market cap. So it's like 90x for Ramsey's to be the market cap of Aerodrome, even though daily volume is twice what it is on Ramsey's as compared to Aerodrome. So that's what I look for mispricing. Now, is it still mispriced? Sure. Significantly, potentially by tens and multiple tens of X's. Is it at the biggest discount? Certainly not. So that introduces a complexity with regard to position sizing, so on and so forth. Hope that helps. Cap token. I would love a cap token. I need a payment mechanism on Arbitrum, and then I could use the RAM, and I could vote on my token. And the only way I would do my token, and the reason I say Arbitrum, is because I would use it as payment for our Discord server. And I think that would make sense. I'm not going to create a meme coin just for shits and giggles. I don't want that. But if I could create a payment token, that's cool. Because the payment token obviously will have memeability as the captain. It would have like 1,000% APR on it because of my VRAM voting capacity. But it's not a meme coin because it's a payment token. I would change the entire payment infrastructure for the Discord server over to payment in terms of this token. Okay, that's cool. That would be a constant bid. You need $10 a week, and people would be buying. And also, they'd be speculating on the price because of 1,000% APR. And that means you buy it, and now your Discord subscription is a fraction of the price because it appreciated significantly. I don't know. So that could be interesting. But I don't have all the infrastructure I need to do that type of implementation. What I need is a Discord bot or Discord bot that has Arbitrum payment capacity where I could force payment in a specific denomination. I already created the token. It's on Arbitrum. It's not really public, but it's on the blockchain. But that doesn't mean anything. It's just a token. I need the other infrastructure in order to do anything with it. Hope that helps. Ready for tapioca, James? Very much looking forward to dessert, and tapioca is massive and epic and grandiose in scale and scope. I am very interested in tapioca. It's going to be very exciting because it's been a long time coming. It's like we've been eating dinner all this time and we're finally going to get dessert, tapioca. Very much looking forward to that. Stoff's in the house, much a pleasure. Angelo, what is equal and is it also a solidly fork? Yeah, equals the solidly fork on Phantom. It's the first solidly fork on Phantom. It's been out for quite some time. It's done quite well. It's up 40x on the money from structural bottom. Uh, fi, Finance Goblin. I'm getting blurry eyed and tired late in the stream. When CVX PAMP Let's take a look at the chart. It's been over $4, down structurally to resistance. Been over $5, almost $6. This is the type of structural bottom we see on curve. It's finally a breakout above the monthly twap, breakdown, support on the 10 SMA at minimum, at minimum, structural expression of support on the monthly 10 SMA. So it's meaningful. Expressions are everything. So what are the expectations? Very hard to talk about expectations with regard to crypto markets. We're coming out of a very strong meme coin season, and meme coins are always very meaningful, no matter what the season is. But the expectations there, 30,000x on the money, $100 into $1 million, and those expectations are not reasonable from a a risk-adjusted financial perspective. Frankly, 10x's and 100x's are pretty fucking crazy. But 10x's and 100x's tend to be uh, quote unquote reasonable in crypto market terms, which is really weird for literal financial products. I mean, literally, equal is up 40x in the money from structural bottom. These types of multiples don't happen in traditional financial products because they involve the monetization of a startup that maybe wasn't even seed round or sold beforehand. Somewhat of a fair public launch, so they have micro market caps, half a mil, 750,000. Most things don't even start with that. Organic liquidity could start in the thousands. So, it's very unprecedented opportunities from uh, a public-facing perspective. With accredited investor rules, you don't have access to this in traditional financial products and services. But in the crypto market, it's an international investment, an offshore investment, an emerging market investment, very much akin to cross-border flow to get into the crypto market. And these types of investments don't have those kinds of frictions, so to speak. So, with expectations reasonable, I have a high opinion of CVX. I've had CVX for a long time. That's the core of the portfolio between CVX and Curve. I still think Curve Federation is such an integral part of a functioning financial system in these crypto markets that whether it becomes the highest value portfolio component or it loses that particular title means nothing with regard to it being so significant and interesting that it was actually created. uh, that's real. That will always be real when Mitch started and created those couple of years ago. Uh, Very much an accomplishment no matter what. And convex and curve are the best representations of those of that federation. And all the ancillary products, all the downstream recyclers and sterilizers are interesting unto themselves. The amount of convex that Cleaver holds, who's the dominant CVX owner, is a very interesting characteristic. So the Curve Federation has created all this downstream financial opportunity built on the base layer infrastructure that they created. So this is all just fascinating, and it's been pushed to the side, so to speak, with our meme frenzy, where the expectations become 30,000, 100,000% of the money, and there'll be a return to reasonable expectations at some point, and that's where I'll always live. I have just a required capacity to right curve the shit out of these markets and have that grounded framework for how to look at potential investments. Find the damn discount, show me a discount. And to see that, we look at the data. I see a discount and I consider if I have a capacity to finance an appropriate position size. Hope that helps. Where can we find info on Tapioca? Unsure where to start. Discord, definitely Discord. They have like 82 tap talks nowadays at this point. Just the massive amount of tap talks. So there's a lot of information there. I'm sure their LBP is coming soon, which is their public sale. And that's like where to start. Probably Discord. Discord's probably where to start for them. Very interesting protocol. It's very right curve though. It's very complicated, very sophisticated, and that's clearly not what the broad market wants with regard to expectations. So just it's important to understand this. Expectations are everything. If you're expecting a tremendous amount of return and it doesn't happen, you end up fumbling the bag and you end up selling early. And that's why I gave up on all that bullshit and I just find things to buy. And that's the rule. If you buy something, that's it, you bought it. It's like no return policy, no backsies, no receipt. It's going to be what it's going to be. So that means buy things well with due diligence and prudence and take your frickin' time. And if you buy the right things heading into 2030, you're gonna be just fine. Okay, 10, 12, 46 p.m. on a Wednesday. 222 people have made it with me to the end of the stream. I appreciate each and every one of you. Together, we could do a little bit better. Tell everyone to subscribe. You know where I will be on X, so if you need anything, just feel free to shout out or jump on a Friday afternoon. And we're always on Discord, the most rational community in the entire crypto space. You all have a good day. Stay rational during the week, and I will see you again on Friday. Peace.